Dale.
Hey, how you doing?
I cannot complain. Happy Tuesday and After Fair Tuesday.
Yes, it is. Happy Tuesday, happy After Fair. Fair was great, weather was awesome, so can't complain.
Not at all. With that 80-degree weather instead of 120, I'm going to take that as a win. All the events that were there were highly entertaining. And speaking of events, we got a lot coming up this week in the mortgage world. We have the Federal Reserve getting their 2-day meeting where they talk stuff and then make decisions, or more likely not make decisions. We have the ADP report, we have the JOLTS report, jobs report, and inflation reports coming out. And you probably already read the really big text. Dale, what's going on with the really big text?
Well, you've got question marks at September rate cut. Maybe we should put the question marks at bettering market as well. It is on the surface getting a little bit better, which is great. And when we say a little bit, we really mean a little bit.
Yeah.
Not by leaps and bounds, but depending upon the job reports and the information they give us, maybe a September rate cut is on the horizon, but don't bank on it till it happens.
Yeah. So what is this betting market that we're talking about?
So I know you know, but for everybody else, you've probably heard the term hedging, hedge funds, those kinds of things. Think back when you were however young and you would hedge your bets. That's exactly what's going on here. The market feels like things are starting to get better, so they're easing up rates. On this is what they call a Japanese candlestick start. Green is good, red is bad. Up is good, down is bad. And you can see since May, rates have gone up a little bit, which is good. If you invert it, you can see, in essence, rates are going down. Again, down a little bit, not a lot of it. But since May, things have gotten a little bit better. So We're hopeful.
And it's worth noting, this mortgage-backed security chart is pretty much just hedging bets. Because if we convert this from a mortgage-backed security chart, take a look at the shape of this, it almost exactly lines up with interest rates. They're pretty much exactly the same. Look back at April until now, we've seen this gradual decline on interest rates. Here we're currently sitting at 6.78%. So they are directly related. But there's an important thing that I want to point out over the last year. We've talked about this before, but never at any point in this last year has the Federal Reserve actually changed their monetary policy. They have not lowered or risen the federal funds overnight lending rate for at least this year-long period. So how is it, Dale, that we can go from 6% to 8% without any federal monetary policy changes?
That all falls back to hedging bets, right? In August, September, October of last year, everybody was extremely nervous where the economy was going, where it was headed. The feds did not change in the overnight interest rate, which is really what we're talking about when we talk about rates dropping. That influences the market. It doesn't control the market, it influences the market. And there was not a positive outlook at the end of last year. And so you saw rates go up. Then things kind of relaxed a little bit. And interesting to note, we are at the same place now as we were a year ago. So a lot of hoopla, a lot of hopla, rates up and down, nervous, not nervous, things better, things worse. Years gone by, we're exactly where we were a year ago.
Actually, one quick amendment to that statement. The rates are exactly where they were a year ago. Housing prices, on the other hand,
yes,
are much higher.
They're much higher. And there's no relief anytime soon with that. So remember again, that 6.78 is an aggregate number of all rates, all programs, VA, FHA, conventional, points, no points, good credit, bad credit. That's just an average.
Yeah. So in summary, to wrap this up, we're seeing a lot of people betting on the market getting pretty good, especially after this week. And we're hoping that those bets are right. We're hoping that people hedging for a better and brighter future is going to get us there. And you have to remember, every single lender wants business. Every single lender wants to be competitive. So if the future is going to be bright and they can maybe offer a little bit better an interest rate than their competitor, they're going to hedge to the better side. But if the future is looking dim, well, then they might want to do the opposite so that they can make sure they don't lose money on an investment. So because we're seeing a general trend in the downward direction, and it's been going on for at least the last 4-ish months, we might be getting somewhere finally. So thank you guys so much for watching. Dale, thank you, and I hope you have a great one.
Have a great day.
All right, bye.